Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Quick Look, and take a look at the dollar versus yen as we head toward the close of the current week and look toward the new trading week starting October 9, 2023. Going into that new trading week, the bias remains a little bit more positive. Why is it more positive? Well, because we're above the 38.2% retracement up from the September low to the high price that we saw on Tuesday. That 38.2 comes in at 149.069, this level right here. And we are above that level in the last couple hourly bars down, tested that level, found support bars near that level, so that pushed the price higher. So that's good news. We're also above the 100-hour moving average. That's the blue line in the chart. That level comes in at 149.11 and above the 200-hour moving average at 149.21. If we look closely at the 200-hour moving average and the current hourly bar, the price did hold above that level right here as well. So that's more bullish here. So this area between the 149.069 level, let's call it 07, and the 149.21 level, this is going to be our bias defining level going into the new trading week. If the price remains above it, it is more bullish. If the price moves below it, it's more bearish. Now the question comes, what are the next targets if the bias remains more to the upside? Now, if we look at this chart, the first target area would be the 149.50-ish type area. That's right here. This level corresponds with different swing lows and swing highs going back in time starting here and here and here and here and here, so on and so forth. You see the number of different times the market found support or resistance against that area. We fell below it here and moved to the downside. And in trading today, we moved just above it here, just above the 149.50 level, but could not sustain the momentum and move back to the downside. So getting above this level is step number one. Then we're going to start to look toward the 149.70 type area, which is right here. This level corresponds with these highs going back in time. And admittedly, the price waffled above and below it here, but there are times when the price did find support on the hourly chart against that level. So I'm going to earmark that level as another target to get to and through. And then we start to look toward not that level, but I'm going to look at this level right here, which is the high price before the peak that we saw in trading on Tuesday. That level comes around the 149.97, and the importance of that is it's right near the 150 level. That 150 level is always going to be a natural resistance level, and then we'll look toward the high price at 150.15 in trading this week. That was the level right before the market then moved about 280 pips to the downside in a matter of seconds on fears that the Bank of Japan would intervene in the market. So that would be another target on the top side. Now, if the price should fail and start to move back below this swing area right here, the bias would turn back to the downside. And what levels would be key on the downside? And if I look at this chart, and I'm going to earmark this 50% retracement level, the move up from the September 21 low. And what we notice here is that the price, after the sharp move to the downside, moved back above that 50% retracement level, and then found support buyers near it, right here and right here and right here and right here. Now, admittedly, the price then over the last few days has seen the price action above and below that level. But you can also see how the price, when it moved above, is more bullish. When it moved below, is more bearish. When it moved above, is more bullish. So getting back below the 148.73 level would increase the bearish bias. Then we look toward this swing area through here near the 148.50 level to 148.44 level to 52. And then we'd look toward the 61.8% retracement, move below that level, look toward this target area down through here where we had a number of different swing lows here, which became our low prices on Thursday's trade before moving to the upside. So those would be the targets on the downside for the dollar versus yen. But it all is going to be dependent upon this swing area here between the 149.07 up to the 149.21 level. That's going to be our key barometer to start the new trading week and give us either a bullish bias or a bearish bias for our trading. So there you have it, a look at the dollar versus yen as we head into the new trading week. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.